Welcome to Accounting Masters. Today we'll be looking on Note 7 and Note 8 of the balance sheet, right? Which is our ordinary share capital and the retained income, right? Retained income, right? So I want you guys to first know that in these two notes, we'll be looking at shares. We'll be focusing on shares. Why? Because the balance sheet in grade 12, just know that we are under the incomes, right? We are under income. That's what the topic is written there on top. If you open your textbook, it's written companies in bold, meaning that your main focus will be what's going on inside of a company. Like, what are the financial ways? What are the cash flows, the inflows? What are the activities that take place inside of a company, right? Now, we will still look at cash flow just to also show you guys how the company uh, makes its or gets its cash flows from, right? So here, we will be focusing on the two common ways that the company use to raise capital, right? Companies have two common ways to raise capital. The number one way is the borrowing of loans, right? I don't feel like in grade 12 you are new to the word loan. You have looked at loan ever since, I think, grade 10, if I'm not wrong. Loans have always been there, right? So the borrowing of loans, it's something that is not new to us grade 12s, right? So the only new common way to raise capital that we'll be dealing with is the issuing of shares. So either a company will borrow loan or issue shares if they want to raise capital, if they want to have cash, or if they want to finance their activities in the company. They can either borrow loans or issue shares. So right now we'll be focusing on the issuing of shares, right? Now, shares have two transactions in them. Number one, we said the company can either issue shares, right? Issuing shares just says the company is selling the shares. It's the selling of shares. The company sells shares when they want to uh, raise capital. Number two, the company can buy back or repurchase the shares. They can either sell them, and in future they can also buy them back. So these are the two transactions that take place under shares. Now, the selling of shares. Companies will sell shares. Now, when they sell those shares in the stock market, buyers that buy those shares, they are hoping that the company will grow and have more value in the future, right? So the buyers that buy those shares, which we will call the shareholders, these guys. So remember, the company is doing what? It's buying the shares. Sorry for the messy handwriting here. So the buyers can buy the shares, but what has to happen first? The company has to sell the shares. Then the buyers will buy the shares, hoping that the company will grow and have more value in the future, right? So those shareholders, they buy, hoping that the company will grow and have more value in the future. Now, in the future, which is bullet number 3 that we'll be looking at, in the future, once the shareholders feel that they've gotten a good return on investment by buying those shares, once they've felt that the company has grown enough and they have a good return on investment, they can now sell back the shares to the company. So this is what we call the repurchase of shares by the company, right? So in the future, the buyers can now sell back those shares to the company, and the company will have to repurchase those shares from the what? From the shareholder. Because the shareholders can now say, guys, I know I bought this from you at this price, but now I feel that this company has gone up and it has given me the return on investment that I intended to get. So I'm selling them back to you guys. what price can we agree upon, right? So a situation that can happen is a situation like this. So let's say in 2020, a shareholder, right? Who is the buyer, right? This is the buyer. The shareholder, the buyer is the one that becomes the shareholder, right? Because they now own the shares of the company. So the shareholder bought shares at 2 rand each. I'm just saying 2 rand each per share, right? Now in 2021, let's say in 2026, the shareholder now feels that the company has been going up in value and it has reached a point whereby they are happy with their return on investment, and they can now say, so that shareholder sells their shares to the company at 6 rand per share, 6 rand each per share. So it means from every share that this guy owns, he's gonna make a profit of what? 4 rand profit. So that's the return on investment that this guy is gonna make. So that's what's going on. And why are the companies buying back the shares? The companies can buy back the shares because they feel that they are lacking the number that they need to be able to sell more shares to interested customers or interested investors. Let me put it like that. So if there are now more interested investors, the company can buy shares at a certain amount to the shareholders, probably to entice them to sell the shares so that they can have what they need to sell back. I mean, to sell these shares to the what? To the new investor. So it's just a transaction that keeps on um, recurring. It's a continuous transaction that is there in company. First, sell shares to a shareholder. After some time, buy back those shares from that shareholder and then sell them again at a higher price than what you bought them for to another shareholder and repeat the process. So that's what's happening. So now we need to check on the specifics of these two transactions that will be going on, the selling and the buying back, right? So for us to be able to focus in detail of these on these two transactions, we'll be using note number 7 and note number. Now, note number 7, this is the ordinary share capital, right? So here, this is where we record shares sold and bought back by the company, right? This is where we record shares sold and bought back by the company. This is the main one that we use to record the transactions of the selling and the buying of shares, right? Retained income will only be there to share some of the burdens of these two transactions. But the main focus on the buying and the selling of shares will be the ordinary share capital. So this is where the magic happens here. You need to master this one, and then once you master this one, everything else will be easy, right? So the ordinary share capital will have two structures, right? Or methods. I'm going to call them structures, but you can also call them methods. The number one structure is the bar structure. The bar structure, this is where we look at the balance at the beginning and then we look at the additional shares. So the additional shares are just the shares that the company sold during the year. Then we'll also have the repurchase of shares, right? So as you can see here, we have the balance at the beginning and the details. This side will have shares, the number of shares that you will be having or that you will be issuing. You will be writing them down this side. Then this side you will be writing them, you will be writing the amount of those shares, right? So you need to know that if I sold 50,000 shares as a company, how much am I going to receive for those 50,000 shares? So here is the number of shares, then here is the amount in monetary value. of those shares. So here we have the balance at the beginning, we have the additional shares, we have the repurchase or the bought back shares, right? Then we, last but not least, we have the end, right? So now here we also have the bra method or the bra structure. So for the bra method, the B doesn't change, still stands for the same thing. This is the balance at the beginning. This now has changed to be the repurchase. In the beginning here, it was additions that followed the B, but now it's a repurchase that follows the B, right? So it's repurchase, and now we have the additional shares, which is the issued share, right? So again, here's my structure. I have my shares on my left-hand side. I have my details in the middle. Then I have the amount in monetary value in the right-hand side, right? Or at the right-hand side. Balance at the beginning, we have the repurchase during, we have the additional shares during, and then last but not least, we have the balance at the end, right? So the reason why the balance at the end, we don't put it here, it's because it doesn't really affect us that much. Because for you to get the balance, you need to focus on these three ones on top. So this one is just the resultant of what? Of these three on top. And so I will focus on these three on top. Now, the bra and the bar method will also be used to help us to determine the average share price, right? So companies will need to know the average share price. They need to know of all the shares that we issued, what is the average share price of the shares that we issued? Like, what is the average that we were selling the shares for, right? Now, once they know the average share price, they can now work around on the average share price to determine how they can issue their next shares or how they can buy back the shares from the shareholder, right? So the average share price here, as we said, the average share price is what we use to repurchase shares in the ordinary share capital. So whenever I'm repurchasing in the ordinary share capital, I will always be repurchasing using the average price. So the I that I'm using here is the company. So in accounting, always when I'm doing accounting, I like to put myself in the shoes of the company or the business. I like to take myself as the business. Hence why I keep on using the word I, right? So average share price is what we use as the company to repurchase shares in the ordinary share capital, right? Now, every time you want to know the amount used to repurchase shares, you need to calculate the average share price. Remember, we said the average share price is what we use to repurchase shares in the ordinary share capital, meaning when you want to know how much is your repurchase in the ordinary share capital, it's a must that you need to calculate your average share price because it's what you need for you to know how much is your repurchase, right? Now, these are the ways that you will be calculating the average share price. So the average share price, it's the, what can I say? It's the puzzle that you need for you to crack ordinary share capital. Once you master how to calculate the average share price, that's it. That's it. You've done like 90% of the work. The 10% will just be the small parts that are very, very easy. Right? Once you know how to calculate and deal with the average share price, then you have passed ordinary share capital and most likely the return income. But the return income also has some new things that we'll need to look at, but we'll get there, right? So whenever you want to calculate the average share price, you will be using the bar method number one, right? Bar method, this is, remember we said this is the balance at the beginning. Then we have the additional shares, which is the issued shares. Then we have the repurchase, right? So whenever I'm calculating the average share price, remember, what am I calculating it for? I'm calculating it for the repurchase. I'm calculating the average share price for the repurchase, meaning I have to focus on the two letters before the repurchase because I'm calculating for the repurchase. I want to focus on what came before the repurchase. So hence why here we are saying B first, which is the beginning. So the beginning amount, so I'm going to put the monetary value amount at the top. So beginning amount plus the additional, which is the A amount, all over beginning shares plus addition shares. Whatever you get, this is what we will call the average share price. So you always focus on the letters before the R whenever you are calculating the average share price, right? Then we go to the BRA method. So on the BRA method, which letter is before the R? Obviously, it's B. So for me to calculate the average share price, I'm going to focus on B alone. Beginning amount all over beginning shares. And then I get my average share price. Very, very easy. So the BRA is very easy. The BAR maybe is the one that might give you some trouble there and there, but we'll do some exam paper example so that you know how to deal with different types of the BAR, right? Now, there is a note here, very important note that you will need for you to master the BAR and the BRA method. So when you are using the BAR method and you are not given either one of the two, remember, Site, on the BAR method, you need to focus on the B and the A, the letters before the R. So if you are not given either one of the two, which is either the B or the A, you will use the balance at the end to calculate the average share price. So you will use the balance at the end. Remember that balance at the end that I said, we're not really focusing on it because it's the resultant of the three, right? We will now be focusing on it if you are not given either one of the B or the A in the BAR method, right? So you will say balance at the end amount all over balance at the end shares, then that gives you your average share price. So for now, I feel like this is what I'm going to talk about in the ordinary share capital as your notes. Hopefully, people understand what we talked about here. Nothing that I spoke about here will be useless, right? Maybe that part at the beginning whereby I was showing you guys the shareholders wara, but this time around, what I talk about here, starting from here at the top, all of it is very important. Please try your best to know it, all of it, right? Know that if in the BAR method you do not have either one of these one, you will need to use what? You will need to use the balance at the end. Very, very important. Don't find yourself stranded because you forgot this, right? Now we'll go to the last but not least, the note number 8. It's very, very easy to approach once you understand the things that are going on, right? Okay, so I actually kind of realized just now that somebody can be maybe asking themselves that I don't know why this doesn't want to erase. Okay, somebody might be asking themselves that how can I determine whether I'm dealing with the BAR or the BRA method, right? Like, when do I know that I have to put the A before the R, or when do I know that I have to put the R before the A? So it will be determined by the dates. You will be given the dates. You will always need to check using the dates which happened first, before or between the additional and the repurchase. Obviously, the balance at the beginning will always be at the balance at the beginning. That one is just the beginning. It won't change. It will always be there, right? And the end will also always be there. The ones that will be interchanging will be these two, right? So these are the ones that will be interchanging between one another. And that interchange will happen because of which one came first whenever you are looking at the date sequence, right? So hopefully we have that now resolved. We can move on to the note number 8, which is the retained income, right? The retained income is like this. So in the retained income, here we need to look at the income or the money that is left over in the company. Hence why here I'm telling you guys that retain means to keep hold of something, right? You need to look at, okay, in this financial year or in this year, how much did we make as a net profit in the company, right? We made this and this as a net profit, right? So after we've made this as a profit, uh, how much of it did we keep in the company? Right? Obviously, when you make a profit, you need to pay SARS. You need to do this and this and this, right? Now you need to know how much did I keep after all of that, right? I made a profit, I paid SARS. How much did I keep after that, right? So now this is what you're gonna be focusing on in the retained income. So in the retained income, you will have the balance at the beginning. So this is the retained money that you have from the last financial year, right? As you are starting this year. Then you will have the net profit after tax of this year. Like, what's the profit that you made after paying uh the father SARS, right? Because SARS needs his money, right? So after paying SARS his money, how much are you left with? Then that's the money that you're gonna be putting here as net profit after tax, because you will retain it, right? You've paid everything, you've done everything. Now you are retaining this money because you have paid everything, right? Then you will have the repurchase. Now, repurchase, repurchase is gonna be divided into two. Remember, we had the repurchase in the ordinary share capital, right? So the repurchase in the ordinary share capital, we said is the one of the average price. Now you will also have the repurchase in the retained income. This one is the one that is above average share price. Remember, I said to you guys, the average share price, this is what you will be using to determine how you can buy back shares or how you can issue more shares, right? So if my average share price is 2 rand, I can say, okay, from this 2 rand, I'm not really gonna buy them at the average share price. I'm just gonna add maybe 1 rand on top and make it 3 rand. So the 2 rand, which is the average, will go to the ordinary share, and then the 1 rand that is above the average will go to the retained income. Now, this is where we look at what we call let me just use it here. So in repurchase, this information will also help you when you get to your cash flow statement. For repurchase, you need to have the triangle every time, right? So the triangle on top here, it will have the total, and then it will have the average price, and then it will have the above average, right? So as I made an example, you bought back shares at 3 rand, each, at 3 rand each, with an average price of 2 rand, right? So whenever you are drawing your triangle for this repurchase, I'm going to put my total. How much did I repurchase the shares at for the total, right? I repurchased the shares at 3 rand each in full, right? 3 rand each in full. Now, 3 rand each in full. So that's going to be my total. It's going to be 3 rand here. And then what is the average price of these shares? It's going to be 2 rand. So what is the above? The above obviously is just the 1 rand. So that when I add these two, they have to give me what? They have to give me the 3 rand. Right? So now this guy goes to the ordinary share capital. As we say, the average always goes to the ordinary share capital. Then this one will go to the retained. This one will go to the retained. Don't know why it just went out like that. Okay, so we said this one goes to the retained, right? Retained income. This one is your repurchase, and then this one goes to your cash flow statement. I mean, how easy is accounting? Can you see? Just a small triangle gave you everything that you need. For three things, you have the ordinary share capital, you will have the retained income, and you also have cash flow statement, right? So every time you're doing either one of these three, always make the triangle for the repurchase. Always, right? Unless obviously you now start understanding it too much that you don't need to draw it, you can do it in your head, then that's still cool, as long as you understand the triangle, right? Now the repurchase always is gonna be in bracket, guys, because the repurchase, remember, you are paying, so money is going out, right? Part of the profit that you thought you had here, the monies that you thought you had, now you are repurchasing something, you are buying something, so you are buying using that money, so that money has to decrease. That's why it's in bracket. Then we will have the ordinary share dividends. The ordinary share dividends will also be in brackets, because again you are paying dividends. You're just paying the shareholders the what can I say, is it interest? I think it's some sort of interest. I don't know how I can really define dividends, but dividends is an agreement that you make with your shareholders to say, I'm gonna be paying you this every quarter or every half yearly for owning a share in my company, right? So that's dividend, right? So you will have two dividends. That is interim dividends that are paid during the year. You will have the final dividends that are paid at the end of the year. So because you are paying people, hence why this is going out, right? It's a minus because money is leaving, right? Money is going out, right? So, okay, then you will have the balance at the end. So here, these two, interim dividends plus final dividends, they give you the ordinary share dividends. So when you add these two, they give you the ordinary share dividends. Now, to find this balance at the end, you will say the balance at the beginning plus the net profit after tax plus the minus the repurchase, and then you minus the ordinary share dividends. Then this will give you the what? This will give you the balance at the end. That's how you approach the retained income. So I feel like we are done with talking about the basics and the structures. Now we can go to the exam questions, right? So I will see you guys when I make another video for the exam questions. So for now, I think let's just end this one here so that we do not make this a longer video, because I think it's already long as it is. So thank you very much. We'll see you in another video. Don't forget to like, subscribe, and comment.